Hey folks, Alex here, 9 to 5 to Freedom. In today's video, we're going to give an update on the market, talk about my portfolio, and get into some community questions, Q&A from our YouTube subscribers. So let's hop into it. Lots to cover here. We're trying to make it brief so we can get to dinner. S&P 500 is pretty much flat for the day. Nasdaq is at 0.13, Russell is at 0.2, volatility index at 1.62. Gold was up almost 0.5% today, and Bitcoin, folks, is climbing up at $92,668, which is pretty crazy. We were just down in the 80s not too long ago. So tomorrow, folks, is a huge day. Tomorrow is the announcement of rate cuts by the Fed. That's supposed to happen at around 2:30 p.m. Eastern Time, December 10th. So we'll see what that happens. I believe the latest was 95% chance of them cutting rates, which sounds good for all of us investors. We'll hop over to the portfolio here. As you can see, we are slightly down at 112,901. Now, I did have a $1,000 withdrawal, and I did have a rough trading day yesterday and not so great day today as well. I'll get into that at the end of the week, but we'll just show you on some of the positions here. Just show you what we got as far as our largest positions. QDT, we're up. Aggie, we are still down 4.9%. I mentioned I'd like to get out of this eventually once I break even. XDT, we're up almost 0.5%. Tdaq, folks, we're up 5%. Amazing. Maggie down 3. We got a little bit of recovery today, but we're still down 3%. QQQI, we're up 3%. My gold position, we're up 3.55%. T-SPY up 2.18%. SPY up 1.84%. Blocks. Now, some folks say, why you still have blocks? Well, I'm just trying to see if this will ever bounce back, but I'm still down 18%. EggQ, folks, I'm up 8% on this position. I only have 50 shares. And HOW, I'm down 25%. This is from Roundhill on the Robinhood stock. So that was also we've seen a pullback on that today as well. So that's what I got overall. Not too bad. Today was pretty much green across the whole thing, except as you can see, XZT had a 0.25% hit today. That was our biggest hit. Everything else was pretty decent. Now, we'll hop over to, let's see here, my margin positions and everything like that. As you can see here, my buying power is $333,000. I am using $1,800 on margin at this point. I did have a automatic withdrawal. And then, like I said, I had a few bad trades these couple of days. So folks been asking me, well, how do you do your day trading? Because they've seen some of my wins that I've been getting. Folks, I'm not consistently getting the wins. This is why I can't rely on this. So until I figure that out, I can't really, account for my day trading. So yesterday I lost almost, it was like 700 some dollars. So it was pretty rough yesterday. Today was pretty much flat, but yeah, not a good day yesterday. I was being bullish while the market was being bearish. So that was bad on my part. Okay, we'll hop over to the community questions. And one of the questions here comes from John Ford E4514. Hey, where can I get this tracker? What video was it that you did? So I mentioned that I teach you how to make your own dividend tracker, and this is the video. It's titled How to Make Dividend Tracker. You can find it on my YouTube channel, and also post a link in the description below for this video. So I don't want to just give you my spreadsheet. I want you to be able to build your own, and this only takes a few minutes to learn how to do that, so everybody can follow along, and it's absolutely free to do that. Okay, next question here from Ricky. All I can say is thank you, Alex, for being transparent since the beginning. You're better off flipping houses since you have experience in real estate, and quit all risk investments. Good luck to you, man. Hey, thanks, Ricky. So yeah, I mean, I had very good luck with real estate. Right now, I kind of lost appetite. I just want to relax a little bit. I've been really bullish in the last few years. I did a lot of repairs and stuff myself, so and I got in at a very good time into the market. All of the real estate in my area has pretty much went up by like um, I don't know, like 60%. So it's up quite a bit. So it's really hard to like cash flow with the current prices in the market with what the rents are. So, and I'm not really interested in doing flips at this point. But I did de-risk my portfolio. So, um, I got out of a lot of those risky funds. I got out of using margin. So it's looking up for me. So I appreciate that encouragement, Ricky. Move on to the next one here from Manish Dog. One has to remember in the final analysis, these funds are designed for income, not growth. I look at the investment, my dollars as a sunk cost, and initial distribution as return on that investment. Once I get all my investment back, then it starts paying me. I estimate I have another 10 months, give or take, until I get 100% return. At that point, I start taking profits. Until then, I will reinvest when necessary and buy new funds when I see opportunity. Okay, so I think I've kind of beat a dead horse around this concept, but I'll do it again just in case you're watching this. Um, I've explained this numerous times in different ways. Basically, one of the flaws in thinking that you can buy into these funds and as soon as they pay you off, you're pretty much playing with house money. You can approach it that way. But whenever you compare it to something like Nasdaq or S&P 500, and you can see that they actually outperform this strategy, then I question what is the point of this strategy to begin with, right? So if you would have invested into something risky like, I don't know, Ulti, for example, and you lost 50% of your NAV within 12 months, or you would have invested into S&P 500 and you would have been ahead by 15% over Ulti, ultimately you are making more money on the S&P 500. All of these distributions that you're getting are basically your own money back. So yes, you can get all of your money back, but then the value of your account will shrink, whereas something that is like an underlier like S&P 500, and even if you use some of the covered call funds like T-Spy or SpyEye or anything like that, you can see that the trends are in the positive and up direction. Yes, you're not getting as much up front, but your NAV stays the same. End of the day, ROI, return on investment, total return is all that matters, because that as the fund shrinks, so do your dividends, because it's always a percentage. So let's say, for example, whatever dividend paying stock you're buying, let's say it pays, let's say it's a $20 stock, and let's say it's paying, I don't know, 50%. So let's say it's a little bit under, a dollar a month, something like that. Well, if it erodes, and it will erode, let's say 50% over the course of the year, every single month your distribution is going to be a percentage of the NAV, the net asset value. So your distribution will be decreasing. Although the percentage will stay the same, your distribution will be decreasing. So first you'll be getting, let's say, $1, then you'll be getting 80 cents, then you'll be getting 60 cents, 50 cents, 40 cents, 30 cents, 20 cents, 10 cents, and then you'll probably have a reverse split. So that is really the premises of it. And you can do all of your experiments. You can check out Dividend Channel. You can look at just the history of the distribution on a lot of these funds, and you'll kind of see what I'm talking about. So I hope that makes sense for you. Hop over to the next question here. What do you think about Xpay that pays 95 cents a month? Xpay is from Roundhill. It is a monthly payer. I just went over to the Dividend Channel calculator. I compared Xpay to T-Spy, okay? So if I run this analysis and I'm just looking back to January 1st of this year, you can see that T-Spy has actually outperformed Xpay, and T-Spy has more significantly outperformed Xpay without reinvesting dividends. So is Xpay a bad fund even though T-Spy outperformed? Obviously not. There could be moments of entry where Xpay would outperform T-Spy. I'm not going to get into the nitty gritty there. But I think overall it's a solid fund as well. I don't have any issues with it. I think even if you compare to something like Xpay, which I do invest in, I think Xpay actually beats that. Let's take a look here. Yes, so Xpay did beat Xpay this year. So yeah, I think Xpay so far has been very solid. Probably something that I might be adding to my portfolio just to diversify as well. Well, that is the questions that I got for today. Really, the only other thing I wanted to cover is some of the trading questions I had. And like I mentioned, this week my trading has been a little bit crummy, and I hope to, once I get a little bit better at what I'm doing, if I have more consistent wins over the course of let's say 3, 4, 5, 6 months, I'll be able to kind of share my strategy and what I'm doing. I have to have it be repeatable. I can't just be lucky and tell you how I do it and you'll be able to learn something from that. I want to make sure that it is a repeatable strategy. So that's all I got for today. Short video. I'm getting hungry, ready for dinner. I hope everybody has a great evening. If you haven't subscribed to this channel and you enjoy this kind of content, you don't want to miss future content, make sure you click that subscribe button. We do have an absolutely free Discord. Make sure you check that out as well. Great conversations are happening there. Leave comments in the video as I'll be replying to them on videos like this. So if you enjoy this, leave a comment. Let me know what your question is, or if you found a magical fund we can retire on, please leave a comment below. That being said, take care, folks.